Ladies and gentlemen, welcome to your favorite podcast. This is realestateinvestormba.com. We created Real Estate Investor MBA to leverage the knowledge of giants through synthesizing and providing much needed information to all investors, from the veteran investor to the new and aspiring investor. At Real Estate Investor MBA, we plan to cover pertinent information head-on with our expert guests, who we will interview on what they are doing and preparing for in the days and years ahead. We aim to create MBA quality curriculum topics and themes from the information garnered among our interviewed guests in order to bring world-class value to our fellow community of listeners. We truly believe that rising water raises all ships, and by sharing this leveraged knowledge, we can create a stronger online community, which translates to stronger local, regional, and national communities. Your hosts are Jeremy Moyer, who is a veteran real estate investor and author of a new book called Are You Playing the Real Estate Game Blind? As well as Tejas Gosai, the owner of eXp Realty, the Tejas Gosai team, and also co-manager in a newly formed Regulation D private equity fund called the Lehigh Valley Private Equity Fund. Now let's get to the show. Welcome to Lehigh Valley Private Equity Fund. Lehigh Valley Private Equity Fund is a Regulation D evergreen private fund designed to provide a 7% preferred return and an overall annualized target return of 12% through diversification in lending and acquisitions in the real estate industry. With over 100 years of combined real estate, investment, and management experience, our management team is actively sourcing opportunities and improving real estate in the Lehigh Valley and surrounding regions. The Lehigh Valley is booming. The private sector GDP is larger than 112 countries, standing at over $41.2 billion annually. Lehigh Valley Private Equity Fund uses three methods to create returns for our investors: qualified lending, buy and holds, and rehab resell projects. Our philosophy is simple: quality over quantity. Our primary goal is to protect our investors, and our strategy is to produce consistent high-yield returns. Thank you so much for visiting us. Contact us easily by visiting www.lvpefund.com or call us anytime 24/7 at 484-362-1313. Thank you so much and have a beautiful day. Welcome back, ladies and gentlemen. We are here with Real Estate Investor MBA. It is all of our favorite podcasts about real estate. Our goal is to share curriculum level information so that everyone can understand the market that we're in here in the Lehigh Valley and just real estate in general. We've had some amazing guests on the program, and I think we have like 17 shows so far. I like to thank everybody in the beginning. My co-host Jeremy and I have obviously been working pretty hard, and Jeremy now has us on iTunes, Spotify, Stitcher, iHeartRadio, TuneIn, and Google.
That's right.
So we're all over the place. Again, we thank everybody for the support. And today is a special program. We have Conquest Funding with us today, and they're very big in the Valley. I'll have Jeremy do the intros, and everybody, welcome to the program.
Awesome. Thanks, Tejas. So as Tejas mentioned, we are together with the executives from Conquest Funding and Imagine Abstract. So Jeff Cella is the president and senior lending officer for Conquest Funding. He sets the strategic direction for the company, oversees all aspects of the company, including reviewing loan applications, capital acquisition, investor relations, and legal compliance. So Judy Hall is the director of loan operations. Her residential and commercial mortgage background is well suited for her role. She interacts with the borrowers, gathering application information, underwriting loans, preparing loan documents, coordinating settlements, and funding draws. And Jen Uriarte is the manager of Imagine Abstract with over 25 years of experience in the title industry. Jen professionally handles all aspects of the title insurance process and clearly communicates with all parties involved for a fast, accurate closing every time. So Jeff, Judy, and Jen, thank you for your time this afternoon and joining us for a conversation.
Woo!
Thank you.
Thank you. Appreciate being here.
Absolutely. Can you first just tell the listeners a little bit more about yourselves and what kind of solutions both your companies help solve within the marketplace here?
Yeah, sure. My background is in banking, commercial lending. I was in banking for about 25 years and decided that during the recession of 2009, there was an opportunity to help out real estate investors who were acquiring properties at huge discounts, but they could not get banks to lend them money. And at the same time, if you remember, deposit rates had plummeted to record lows, and people with cash didn't know where to invest. The stock market was down 50%. And so I thought if I could bring these two groups together, I could create a business and solve that problem of providing quick, short-term financing for real estate investors.
Awesome. Judy, Jen, you guys want to add your portions?
Go ahead, Jen.
Okay, no problem. So my name's Jen. I'm the manager over here at Imagine Abstract, and I've been in the title insurance business since 1991. Of course, I'm dating myself now, which is just great. But I did take a few years off to be with my kids at home. But when I got back into the title insurance business, I met Judy. And Judy and I just worked so well together. Everything just clicked. And we were able to come over and start Imagine Abstract over here. And everything's been running really smooth over here. And I finally feel like I found a home that I can stay with for a long, long time.
Nice. Like to hear that.
Well, I've been doing mortgages for 25 years in some capacity or another. I started out as a CSR, my own branch. And then a few years back, I'd say 5 years back, I met Jeff at one of my settlements. He was doing a loan. I thought his concept was brilliant for Conquest Funding. And I said, I want to come work for you. Well, I waited. And enough time. It was about 2 years. He called me up. He said, I'm ready. I said, I'm there. So I came over here to start working at Conquest. And I said to Jen, we're both going over to Conquest. Jeff's a great person to work for, great guy, and a great leader.
Nice. I agree. I working with Jeff for quite a bit now, and I'll throw some of our stuff in later on. But wanted to show the website conquestfunding.com, which has some case studies and some information. But I wanted to take a minute and introduce you guys in a different way. So as a realtor here in the Lehigh Valley and an aggressive realtor here in the Lehigh Valley, we know that some of the folks that we work with are introductory or seasoned or, have thousands of units. But everybody has like a different blend of what they want to do. And to be able to function in your space, there's, loan demand and then a lot of review. I know one thing, speaking from experience, there are even times that you talk to a borrower and say, maybe this isn't the right project and things like that I don't think a lot of other agencies do. And my last thing is I know a couple people that you have taken from just a couple units and now have millions of dollars in real estate because of what you've been able to do for them. So thank you for keeping our real estate world running. But as a first kind of introductory question, how do you figure out how to take on a project or a borrower, and how do you guys work together for that?
Yeah, it's a great question. I bring all my banking experience to this business, and there's a big difference between traditional hard money lenders and bankers. And bankers really get to know their borrowers. They want to understand their cash flows. They want to understand what their goals are. And so when we sit down with a borrower, we have a long, in-depth discussion about what it is they're trying to accomplish. And in some cases, they want to build rental portfolios. In some cases, they just want to flip properties. And so we look at all that along with their finances and their credit history, and we assess whether they are the kinds of people that we know can be successful. and it takes certain characteristics to be successful in this type of business. And some are relatively new that we have worked with. As you say, they only had a couple of units, or in some cases none. And we walk them through the process of how to build a rental portfolio, how to flip properties. We prefer to work with people that have experience, but we have taken on new folks that are ambitious and are willing to learn. And so it's just really a process of getting to know the borrower, analyzing all of the critical components that make up a good borrower. And then as they get to know us and how we work, they realize that we do a lot of hand-holding initially, but once they get up and running, they just do project after project. And I think Judy can probably add some real-life stories about how our inspector, our property inspector, goes out to check the properties before, during, and after the renovation work is being done in these properties, can really add some additional depth to what we do. Judy, you want to talk about that?
Sure. Well, we had one recently, for example. Our inspector went out and he told them they may need a fire suppression system because it's going from a 4-unit to a 5-unit. Well, it just so happens that they said they're walking away from the deal. He thought it was a great property. They could make the money on it that they want. So he gave his extra time and called the company up. They're doing the inspection tomorrow. Now they are closing on December 4th, appraisal scheduled, and they're really happy. They said the best thing they ever did was come here to Conquest to talk with us because they were new. We did their first project with them, I think, about a year ago. Now they're on their second one, and now they're doing a 5-unit. So they're very happy, and they're great. They're a great bunch of people too. So we get to know all of them in depth, so we know when their birthdays are. I know what happened. I like to talk to them. I don't want to be overly big that we don't know our borrowers, but we want to grow too. So.
And then just to complete the set, that's where, Jen, you come in and close them, right?
I do. That's the whole goal here.
What's the fastest you guys have closed a property before with somebody?
I'd say 5 days was the quickest we closed.
I think we did one quicker than that.
I actually think we did.
Remember we had that phone call?
Like
Yeah, we had a phone call on a Friday, and I think it was like Tuesday.
Oh, okay. You don't count the weekend, yeah.
Right.
Yeah, and that's one of the great things about us having our own title company is that we are, as we're proving the loan and going through that process with the borrower, Jen is also working on the title. So the coordination is almost instantaneous between the two sides of the company. And we can move that process along so much more quickly than what other title companies can do. Plus, Jen is fantastic at what she does. She's very, very accurate in what she does and takes a lot of pride. And she understands that this process has to happen quickly because time is money for real estate investors. So she gets on it. She communicates great with all the parties involved. So everybody knows what needs to get done. Everybody knows what pieces we still need to get to a closing. And it makes it so much smoother than we have seen. For the first couple of years, I didn't have a title company doing this. I was at the mercy of other title companies, some good, some bad. And when you get a bad one, it makes life so difficult. So it's great to have Jen working on our team.
Definitely. So, Jeremy, you got anything?
Yeah, I have a few kind of like 3-part questions, I guess we can say. So just to clarify, is the Lehigh Valley market in Pennsylvania your primary market? Do you venture in other nearby markets as well?
Primarily it's Pennsylvania. We do get into New Jersey, in the western part of New Jersey. We do some things in Phillipsburg, Stewartsville. So we do get into New Jersey. But pretty much just Pennsylvania, New Jersey is our market.
Okay. And then I'm just curious, given, I don't know when this will come out actually on the podcast, but we're recording this mid-November 2020. How's the business been this year in comparison?
Yeah, it's a good question. It's very interesting because COVID shut everything down. You probably recall that in middle of March, everything stopped. Appraisers couldn't go out to look at properties. Real estate agents couldn't show properties. Contractors couldn't work. So it definitely slowed us down. But what's amazing is we have made up for that lost ground. Those 90 days that things were shut down. We have actually caught up and are on track to surpass last year. And so what we found is that COVID, while it was pretty rough for a while there, did not have much impact on our borrowers. And what we were surprised as we were talking to all of our borrowers was that they were more interested in wanting to know when we were going to open up and start lending again, more so than anything else. And they were anxious to buy because they were signing agreements, which I'm not quite sure how they were doing that without agents, but somehow they were getting properties under agreement. And they were anxious to close. So we had to get back in business pretty quick to satisfy the loan demand. And it's been strong ever since. We always have more loans than we can keep up with in terms of dollars.
Now, is a lot of the loans, I guess I would say, post-opening from COVID, is that a lot of repeat borrowers, a lot of new borrowers entering the marketplace? What's that look like?
Yeah, I think it's a combination. We really like to have repeat borrowers. We like to screen the borrower one time with all the financial information, get to know them, and then we want to just do deal after deal after deal. And what's interesting is we have gotten referrals from our existing borrowers for other borrowers that have been doing this with other companies, but they just weren't quite satisfied. And I think, Judy, you probably know the numbers better than I do, but I think we picked up probably 6 or 7 new borrowers since the end of May.
Oh, easily. And a lot more than that, too, I'd say.
Okay.
Some of them just had questions, but a lot of them, even the applications we took back in April, like if I talked to someone in April, they came back now to do loans now. They just were waiting to find that right property.
Mm-hmm. Yeah, and these are experienced borrowers too. It's interesting to see that our experienced borrowers are referring other experienced borrowers to us.
So let's say a newer borrower comes to you, no relationship, maybe they've done 1 deal, 2 deals, very inexperienced. What could they do to present to you to provide you with what you need to fully, one, underwrite the deal, but really underwrite them? Mm-hmm. Individual as a borrower for Conquest?
Let me jump in too. For some of our listeners who have never done a real estate project or have never done a fix and flip, and they play on the internet and try to run the ARB and stuff like that. How do that? Following what Jeremy was saying, like how do we get it moving?
Mm-hmm. Yeah, well, we have a checklist of what information we need, and we can send that out to them, and then they can send that information back to us, and it's really combination of their financial information about the property. And then Judy kind of assimilates that and starts asking the questions. And we'll analyze the deal along with the borrower. She'll show the borrower step by step how we look at the numbers, what we're looking for. And we typically finance 90% of the purchase price and 100% of renovation costs. And we hold the renovation monies in escrow and release those in draws. One of the unique things that we do once we have a qualified borrower is when we close, we release the first draw up front and at settlement generally. And that way the borrower has money to get the project going. So, but it's really a matter of gathering all that information and assimilating that and putting together the pieces that show us that the borrower has the credit history, the income sources to pay the interest payments during the renovation, some cash reserves. And if they've only done 1 or 2 projects, talk to us about those projects. Were they successful projects? Did they work out okay? Did you lose money? If you lost money, why'd you lose money? Do you know what you did wrong? And sometimes it's, hey, I got a bad contractor. Or, gee, I didn't figure this into the cost, but now I know. Okay, great. We understand people are learning as this process goes along. In some cases, we can save them, as we said before, that our inspector will go out and make recommendations when he looks at a project and say, you should put more money into this thing, but less money into this. Or here's a way you can save money in some aspects of what you're doing. So that all becomes very important. And that's an additional service that we provide without charging our borrowers. And that's just part of what we do. It's the same way I do some financial consulting with our borrowers, lay out a roadmap. If they want to build a big rental portfolio, there's certain things they have to do to make themselves attractive to banks. I call them the secrets of banking. They're not really secrets, but a lot of people just don't know. Once they see the way to properly structure the finances to make themselves attractive for banks, they become great borrowers for the banks, for us, they become repeat business for us, as well as the local community banks. And it's a win-win for everybody.
It's awesome. Jeff, I got to pull something up here for you guys. I see the word never over here. And I'm looking at your bio. It says, we're generating roughly $32 million in loans, totaling over 340 projects since that time, and never missing an interest payment to any investor. It's on the website.
That's true. That's absolutely true. Yep. We have two investment funds. One I started in 2011. That's pretty much shut down at this point. But we opened a new one in 2018 under Regulation A, and we have never missed an interest payment to any of our investors, and none of our investors have ever lost a dime. So yeah, we're pretty careful. We've only ever taken back 2 properties in our entire 10-year history, and I think right now we've financed actually about $45 million, representing almost 400 projects.
That is intense.
It is. Yep, we've learned a lot along the way, and we've got a lot of great friends that are borrowers and investors that are putting the money in, and it's a win-win for everybody. So we just keep it going forward.
Well, and then, a lot of those folks switching from like introductory to a little bit more complicated, there's some folks that have been with you for a while. Now with the environment, are they selling off assets? Are they still looking to buy? And when they get, to owning a bunch of properties, can you share some of that like secret sauce for banking or what people are looking for?
It's something I kind of reserve for our clients. So I don't want to tell you everything.
Yeah, that's fair.
Well, yeah, I mean, some clients are definitely selling properties. They're kind of getting rid of the stuff that they don't want in their portfolio, and they're hanging on to the real good ones. And when it comes to what the banks are looking for, it's really cash flow of the properties that they own. It's their personal cash flow. It's having those cash reserves is a big deal now because they want to make sure if something goes wrong, you have tenant vacancies, or in this case, with COVID, where you have tenants that are not paying and they can legally not pay you for an extended period. Do you have those reserves to pay your taxes, your insurance, and your mortgage payment? So those are some of the things that you have to have in place if you're going to borrow money from banks.
So is the primary asset that your borrowers are acquiring, just distressed 1 to 4 units? I know you mentioned a 5 unit, converting from a 4 to a 5. What's that look like?
Yeah, I would say about 90% of what we see are 1 to 4 family properties. Isn't that right, Judy? You agree with that?
Yeah, that's right.
Yeah, and then we get some mixed-use commercial. We financed an ice cream takeout food place recently. It's got a couple of apartments, but this kind of interesting little takeout place as well. We've financed a couple of different commercial projects, but most of it's in the 1 to 4. Occasionally we'll look at something that's 5 or 6 or 8 units, but those get to be bigger, more complex deals. We're open to doing them, but we don't see that many of them.
Have you ever co-lent with another institution like yourself or a traditional bank?
Yeah, we have sold a number of our loans and participated in loans over the years, and it's good and it's bad. It's great because you can leverage your dollars. It's bad because you kind of lose control. You don't have the say so with every transaction. And with the shutdown of COVID, we kind of lost one of our major sources. So we're in the process of trying to find another source to participate loans with. But we're close to having something. Probably this week, next week, we'll have something lined up where we can do larger loans and participate loans. But yeah, that becomes a very important key because as you want to grow, as we want to grow, you need to have access to capital, and you need to have other lenders like ourselves or much bigger that are willing to share in those loans. It diversifies our risk. It allows us to leverage our dollars, and it's a win-win for us and for the other firm. We get to spread the profit around as well.
I was just going to ask, with distressed properties, it's not only the property that's sometimes distressed, but also title can be distressed, right? And with issues that come up on title. I just wanted to, I always like listening to title stories. So
there you go.
Yeah, like that. I'm curious,
There's quite a few.
Yeah, I'm curious on just a few examples of what you've come across and if you were able to help the client resolve the title before purchase.
Oh yeah, definitely. I mean, we see all kinds of things over here. It's kind of funny how they slip through year after year after year and never get caught, and then they end up on my desk, and I say, "How did this happen?" And but that's the whole point of title insurance. So we make sure it's all cleaned up for the buyer and ready to go. Clean, clear title. That's what we want, and a smooth process. So it's a lot of work over here. I can tell you, for example, just one like we recently had a deal in which 3 days prior to closing, the attorney that was involved preparing the deed sent over the deed, and it came over with 2 parcel numbers on it. Now, when I looked back at my agreement of sale only had 1 parcel on it. Apparently, there was a small piece of land right next door that should have been included in the agreement of sale, but it was missed, which means I missed it on my title when I did my search because I didn't know anything about it. So I had 3 days before closing to get tax certifications and search in the courthouse and then clear that title if anything popped up. And we made sure that the buyer knew nothing about it and it closed on time and everybody was happy. And that's what we go for. That's what you want done. You know, you don't want to stress anybody out. So let me take on that stress. Let me take on clearing the title and getting it to closing on time. That's the goal.
Thank you for your service.
Thank you. It's fun.
I've been through a few closings with you. I personally say you're a lifesaver.
Sometimes we are, but my motto is to never be the reason a deal doesn't close. Like I won't let it happen. Imagine Abstract will not be the reason a deal doesn't close. It will happen.
You got to put that underneath the sign in the back.
I know. A little slogan.
So, Judy, real quick. Look, I know you're a lot of the backbone here, and you deal with a ton of the clients. And I'm just assuming, you know, you get phone calls sometimes randomly or weekends or whatnot with things that are going on. I know you make yourself unavailable to a lot of people. But can you talk about, from your perspective, you know, what getting through COVID and getting ahead of it and all that, it's got to be, 1, market conditions, 2, you guys and what you're doing, and, you know, your borrowers who really, you know, they come back to you and they're asking for the next piece. What do you guys think is going to happen next year? Judy, you first.
I think we're gonna grow a lot. Our borrowers, they keep wanting to buy more. The new borrowers that are coming in, they're great borrowers that are coming in. After their first deal, they want to buy more. They're already asking how many can we do at one time. And I tell them, after your first deal, let's wait and see how it goes, and then we'll start over again on another property. But it's great. Just the borrowers are wonderful. I love this job. It's so great working with them. You get to know them. They could call you at 12 at midnight. I don't care. If I'm up, I'll answer the phone. I'll send emails out at 12, thinking everybody's sleeping, and I'll get responses at 12:30. Mm-hmm. So it doesn't matter. Whenever they call, just as long as we're available, the loan's closed, they're happy, I'm happy, and that's about it.
All that matters. Jeff, what do you think about, I mean, you guys specifically, and then the market too, for what's going to happen?
Yeah, I think people have reevaluated their home purchase and even rental uses. You know, with COVID, people want to have a Zoom office, right? They want to have that office in their house so they can close the door, keep the kids and the cats and the dogs out and all that kind of stuff and conduct business. So they're reevaluating their living situation. They're saying, is there a better fit for what I need? And so there's a lot of movement within the market. And there's also a lot of folks coming in from outside, from New York, New Jersey, that are acquiring properties here. And I think the same thing is happening in the rental market, where people are probably stepping up from a 1-bedroom to a 2-bedroom, or a 2-bedroom to 3-bedroom, to try to get that little extra space so they can conduct business, because it's really becoming the way people are going to live and work kind of out of their homes more and more. So I think that's going to continue. I suspect that this market's going to be pretty good. The Lehigh Valley is well situated between New York and Philadelphia. And there's a tremendous amount of warehousing going up in this area as well. And I think that growth here in the Lehigh Valley is going to continue. The opportunity is going to continue. I think the housing shortage is going to continue, which is going to be, you know, good and bad. It drives up prices. It just puts a lot of pressure on the little bit of inventory that's out there, but it keeps things moving. You know, gives us opportunities to keep doing what we're doing and closing more loans. And just want to add a couple things too. You know, Jeremy was asking about the stress. All these are distressed properties, and in some cases they're not distressed. I mean, most of what we see are properties that need to be renovated, but we do have borrowers who use our money to buy properties that are already rented and all they want to do is close quickly and get possession of that property. A lot of times they'll tell the seller that, hey, we can close in 20 days because they know Imagine can get the title work done that quickly, and they know Conquest can easily fund the loan in 20 days. And so they get good deals on rentals, and then they'll hold them for 2 or 3 months and go back to their bank and refinance them. So that's a whole nother strategy that people use our money for. And it's relatively inexpensive to use our money for 90 days. And we have no prepayment penalty. So if they want to pay us off in 30 days or 2 weeks, I mean, we've had people do those kinds of things already. So I just wanted to put that out there as well. I didn't quite completely answer that question.
And you're on the money. I think with the movement too and what's happening, I've said this on every single one of our podcasts, and I'm very public about it. I do think that the Lehigh Valley is very insulated. We are super blessed that we have our highways, byways, and our river close to the New Jersey border, all those things. But one thing that I have seen that's a big problem from the realtor perspective, and Jen, I know you don't just close for Conquest. You're work with a lot of other realtors. I've seen appraisal issues all over the place, and that's because our market's moving quick. Kind of nobody knows what to do here. Are you seeing that, Jen? Are you having any issues on that front?
You know what? It's really rare that I'm seeing it, surprisingly. With the interest rates that are so low right now, everybody and their mother is refinancing. So, but the rates are so good, and I haven't seen any real issues with appraisals coming in, and everything just seems to be closing on time with the lenders. Like they're working day and night to get things done, but they're pulling it off. They're hiring more staff, transferring people to different departments. I mean, but they're pulling it off. They're doing a really great job. And, it's the same over in title. So we just have to keep plugging along.
Keep it going. Just to kind of reiterate, I've had some appraisals that haven't made it. And, I mean, we're losing out on some deals here. Buyers have a much harder time getting the property. They are not comfortable with going a little bit over asking. It's like, alien, things like that. So, I mean, the influx, like things that are moving are they're still very variable, right? This whole presidency thing, other parts, I don't want to get political, but it is super clean to see how you work as somebody who knows from the back end of this stuff. Go ahead, Jeremy.
I was just going to ask for the listeners that wanted to get in touch with you, like how could they do that? A website, contact info, just so we can post on the website and all that.
There you go.
Yeah, they can go to our website, which is conquestfunding.com and imagineabstract.com. So those are the two websites.
Perfect.
Contact information's on there. They can call us, email us, stop by. We don't mind visitors. They got to wear a mask, of course. But.
Of course. Awesome. One question for me, Jeff. Are you getting a lot of out of state folks that are looking for money?
We have borrowers coming from New York that are buying properties here in the Lehigh Valley. So our focus is primarily Lehigh Valley and surrounding communities. But if they live in New York, New Jersey, that's fine. We can do business with them. We do all our checks, background checks, credit reports, and everything, and learn as much as we can. Several of them have been referred by other folks that came to us years ago from New York, and they've been kind of talking to their friends about what they're doing here in Lehigh Valley, and it's just kind of spread out to, I don't know how many we have, 5 or 6 New York, or 7 maybe. So it's interesting to see the network developing here.
Big thank you. I've been wanting to get you guys on our program for quite a bit of time. Appreciate it, and hopefully, everything kicks up. Winter is coming, and things are going to be a little bit interesting. But we'd love to have you back on in the future, and appreciate it.
Definitely. Welcome the opportunity. Thank you very much.
All right, that's Jeremy Boyer, Tejas Gosai over here, and we've had Jen, Jeff, and Judy. ConquestFunding.com and Imagine Abstract. And we love you guys. We'll see you on the next podcast. Cheers.
Thank you.
Thank you.